Lumen Technologies saw its stock price climb by 5% in pre-market trading on Thursday after the company announced a major new alliance with Palantir Technologies. This agreement is not a small step, it is a significant move that reflects Lumen's efforts to shift from being a traditional telecommunications company into becoming a next-generation technology infrastructure provider. Investors responded positively because partnerships with companies like Palantir, which has become one of the most recognized names in artificial intelligence software, can often mark a turning point for businesses trying to modernize. The partnership will see Palantir's Foundry platform and its artificial intelligence platform integrated into Lumen's core operations. These include its financial departments, its technology functions, and its broader business structure. The purpose of this integration is straightforward. Lumen wants to simplify complicated workflows, speed up the pace of decision-making, and streamline operations that have been slowed down by legacy systems for years. Instead of managing outdated processes that no longer meet the demands of modern markets, Lumen intends to use Palantir's advanced tools to automate and optimize. The benefits of this collaboration go deeper than just efficiency. Palantir's platforms will be applied across multiple areas of Lumen's business. For example, in customer service, Palantir's tools can help identify patterns in client behavior, which could allow representatives to respond more effectively and proactively. In compliance reporting, software solutions can automatically sort through massive amounts of data to ensure that requirements are met without wasting countless hours on manual reviews. In the case of decommissioning older telecommunications systems, Palantir can provide analytical insights into which assets should be retired and when. This can save costs while also making room for newer technologies. Finally, Lumen can use Palantir solutions to migrate its products into modern ecosystems, making its offerings more competitive in the digital age. Dave Ward, who serves as Lumen's Chief Technology and Product Officer, emphasized the importance of this shift. He explained that Lumen is already powering much of the infrastructure needed for the artificial intelligence economy, and it is therefore determined to make its own internal operations just as intelligent and efficient as the networks it provides to customers. This statement highlights the company's recognition that leadership in technology requires not only serving clients, but also innovating internally. Lumen is making use of its physical fiber network along with its digital platform to support the needs of customers who are increasingly turning to multi-cloud solutions and artificial intelligence-ready services. The telecommunications industry has entered a phase where modernization is no longer optional. Competitors that fail to upgrade risk falling behind in a fast-moving technological landscape. By aligning with Palantir, Lumen is signaling to investors and customers that it intends to keep pace with, and perhaps even stay ahead of, these broader industry changes. While this news about Lumen and Palantir generated optimism, another development caught many by surprise. Back in March, we reported on billionaire investor Stanley Druckenmiller completely exited his position in Palantir Technologies, which has been one of the most closely followed artificial intelligence stocks in recent years. But now we are going to tell you what company this billionaire used his Palantir profits to buy. Form 13F filings are required for any investment manager who oversees at least $100 million. They must be filed within 45 calendar days after the end of a quarter and reveal the buying and selling activity of some of the most influential investors on Wall Street. While Warren Buffett's moves are usually the most closely scrutinized, Stanley Druckenmiller, who manages Duquesne Family Office, is also widely respected for his ability to spot valuable opportunities. Looking back at the 12 months ending on June 30th, 2025, Druckenmiller's filings show a striking decision. He sold every share of Palantir that his fund owned. This move is significant because Palantir has been one of the most widely discussed companies in the artificial intelligence sector. At the midpoint of 2024, Duquesne Family Office held nearly 770,000 shares of Palantir. The stock had gained popularity thanks to its unique platforms Gotham and Foundry. Gotham is primarily used by government agencies to assist with military planning and data collection, often through multi-year contracts with the United States and other governments. Foundry, meanwhile, is a platform designed for businesses, helping them interpret massive data sets and improve efficiency. Because there are no exact substitutes for what Palantir provides, investors have been willing to pay a premium for its shares. Even with this background, Druckenmiller sold his entire stake between June 30th, 2024 and March 31st, 2025. The average holding time of securities in the Duquesne portfolio as of June 30th, 2025 was less than 7 months. That suggests Druckenmiller investor often cashes out after meaningful gains, which may have been the case with Palantir. But another reason may involve concerns about Palantir's valuation. Historically, companies at the leading edge of a major trend have tended to peak at around 30 to 40 times sales. Palantir's price-to-sales ratio recently stood at an extraordinary 115. Even though Palantir continues to surpass Wall Street expectations for both revenue and profit, it is hard to justify such a valuation. No mega-cap company has ever managed to sustain that kind of multiple over time. There is also the issue of insider selling. Since Palantir went public in September of 2020, there has been only one insider purchase by a current or former executive or director. In contrast, more than $7.6 billion in stock has been sold by insiders. This imbalance raises concerns. If the people running the company are not buying shares, why should outside investors feel confident enough to do so? Although Druckenmiller exited Palantir, he's been increasing his involvement with Broadcom, another company that plays a central role in the artificial intelligence sector. As of June 30th, 2025, Duquesne family office owned a little over 86,000 shares, valued at about $24 million. Part of the reasoning behind this move could be linked to the sharp market decline in early April 2025. After President Donald Trump introduced his new tariff and trade policy on April 2nd, the Standard & Poor's 500 experienced its fifth largest two-day percentage drop in 75 years. For nearly a week, fear dominated the market, which created opportunities for investors like Druckenmiller to acquire strong businesses at attractive prices. While it is not certain when the Broadcom shares were purchased, it is possible that the early part of April was when Duquesne added to its position. Broadcom's importance to the artificial intelligence revolution cannot be overstated. Its hardware connects thousands of graphics processing units within enterprise data centers. This connectivity maximizes computing power and reduces tail latency, which refers to the lag in processing that can cause delays. In artificial intelligence applications, where split-second decisions are essential, minimizing latency is critical. On top of this, Broadcom's custom artificial intelligence application-specific integrated circuits represent a huge growth opportunity. Chief Executive Officer Hock Tan has stated that these chips could generate between $60 billion and $90 billion in revenue for Broadcom by 2027 from just 3 of its biggest cloud customers. While artificial intelligence networking accounts for a large share of Broadcom's current growth, it is not the company's only business. Broadcom also generates significant revenue from wireless chips used in smartphones, cybersecurity solutions for businesses, and technology applied in industrial robotics and automobiles. This diversification gives the company resilience if enthusiasm for artificial intelligence stocks were to fade, or even if an artificial intelligence bubble were to burst, Broadcom would still have other important revenue streams to rely on. Finally, the company's valuation is appealing. If Druckenmiller was able to buy shares in early April, he may have purchased them at a forward price-to-earnings ratio below 20. For a company expected to grow its revenue by more than 20% per year, that is considered a strong value. This combination of growth potential, diversification, and reasonable valuation likely explains why Druckenmiller chose to reinvest in Broadcom while exiting Palantir. In the end, Lumen Technologies announced a new partnership with Palantir Technologies to integrate Palantir's Foundry and artificial intelligence platform across its operations, finance, and technology areas, which boosted Lumen's stock by 5% in pre-market trading. This collaboration is meant to help Lumen move away from outdated systems and become a modern technology infrastructure provider, while also improving efficiency in customer service, compliance, and product migration. At the same time, billionaire Stanley Druckenmiller sold his entire stake of nearly 770,000 shares in Palantir between June 2024 and March 2025, raising concerns about the company's high valuation and heavy insider selling since its public debut. While exiting Palantir, Druckenmiller turned his attention to Broadcom, buying over 86,000 shares valued at about $24 million, likely taking advantage of April's market downturn. Broadcom plays a crucial role in artificial intelligence by providing hardware that connects thousands of graphics processing units in data centers and developing custom chips that could generate between $60 billion and $90 billion in revenue by 2027, while also benefiting from strong sales in wireless chips, cybersecurity, and industrial technology. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.